everything is noise sub 5 years. So like, just don't even think about it.
It's quite funny because I've become pretty public in all of this space, and I've got a very clear idea of where I think it's going and how it's going to go. So I have my thesis, and when everything starts falling apart, like the market starts moving, I look like, how has it moved in the past? And it's done similar things, right? And I've been telling everybody who's ever got into the space, you need to expect a 50% correction in a bull market, and you might see a 70% bear market. And over 5 years, you'll have still made more money than you could imagine. So you have to accept those things. So this thing starts tanking. Bitcoin starts first, then Ethereum rolls over later, and it's all down 50%. And I said, I've got this weight on my shoulders. I've got all of these people that have been following me. I have been telling them this, but it messes with your mind. And I pick out the one chart that matters to me, which is the adoption chart. Is anything that's going on with China and mining and this and that changing the adoption curve or not? No. So then, as you said, the relentless rise of technology continues. So la la la, I can't hear it. So I turn around to my wife and I'm like, you know, it's fallen 50%. Everybody's freaking out. And she just looked at me and goes, you are all so ridiculous. She said, you said you should expect this. Now it's happening. Everybody's freaking out. And she just walked off and said, don't be, she just said, don't be so stupid, and walked out of the room. And I'm like, yeah, just, Twitter is somewhere sometimes, or Reddit, or whatever forum you're on, is sometimes your enemy. And sometimes you just need to turn that off. Now, it's been the same with investing in Amazon, right? The reason Bezos is so wealthy is because he was probably one of the only people in the world who had Amazon shares from the beginning and never sold them, because it went down 95%
Oh,
in 2001 too. It's had several 60% falls, and it still made him the richest man in the world. This is what exponentiality looks like. And for people who are a little more savvy, there's a magic trick to everything to keep your sanity in this, because this stuff goes like this, and then it does this, and you'll see there's like free charting almost on every platform now, Trading View, something like that. Just change the scale to a logarithmic scale. And what you'll find is, like, you look at Facebook, it goes like this. You look at Amazon, it goes like this, right? And it always feels like, I can't buy this. This gone up too much. That fear that you had at 52,000, right? But that's real. You change it to a log chart, and it's a beautiful trend. And you realize it's all noise. And yes, those movements can be 50%, 60%, but it's just moving in that lovely little trend. Facebook has done that since 2012, never deviated. Nor has Apple, nor has Microsoft, nor has Google. None of these have. Not even Tesla, and nor has Bitcoin, and nor has Ethereum. They're all network effects, and they're priced in the same way. They're all exponential in nature, which we can't get our heads around until you put it on a log chart, and it makes you calm down.
what does the log chart do? I've heard the phrase, but I honestly don't know what that means.
The scale. So normally a scale would go like a Bitcoin chart. Well, because it starts really low, it might start at $10, and then it's got to go up to $65,000. So suddenly you're seeing a move, $1,000 move. It looks small, but before it was big. So what happens is it squashes the chart, because most of the price action has happened from, let's say, $10,000 to 65,000. So you keep getting this, looks like this all the time.
And so this is just by stretching out the timeline?
No. So what a log chart does is change the scale, where it doubles every measure. So it goes $10, $100, or it goes 10x, let's say, $10, $100, $1,000, $1,000,000. What that little trick does is smooth out all of this issue. So you'll get comfortable when you look at it, just to realize that, and look at the scale, look how it's changed versus the other scale. And you'll see from that, it basically compresses all of this. It's the same as if you used percentages. because a 5,000 point move now in Bitcoin is not the same as a 5,000 point move when it was at 5,000. It would have been 100%.
Mm.
And now it's not. Now it's like whatever it is today, 10%. So it's changing that. And that really, really, really helps.
It's interesting. So you're getting into the psychology of all this, which I find utterly fascinating. Of it doesn't matter what you look at, it matters what you see. So you're looking at this chart, you have to be very careful because most of the charts, at least I use Coinbase Pro, so it defaults to like a really short time period. And so it's just like, oh my God, like this is all over the place.
Why do they do
And
that? Because it makes you trade more.
yes, 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 no doubt.
And you're like, oh my God, I need to sell, I need to buy, what do I need? And then you zoom out and put the 5-year chart or 10-year chart, and it's like, oh, this is noise.
That's exactly what it feels like. And I've heard people talk about that. I think it's very sage advice. When you're feeling stressed, zoom out, like literally zoom out the timeline so that as you broaden out and it's like, oh, okay. This all gets very smooth and easy to handle. Now, the best way to look at somebody's conviction around their thesis is to see what their percentage allocation of their net worth they have in said thesis. So when I started in crypto, I was like, okay, 1%. I'll get to 1%. I just don't want to be a fool. It's sort of schmuck insurance. Then as I got to 1%, I was like, well, this feels pretty good. I'm going to go to 2%. And then that's where I was about when it started to fall. And so I was like, okay, well, here's my opportunity to buy in. Thesis is still intact. Why don't we go to 5%? And so now I'm like, well, 5% feels pretty good. I'm thinking about 10%. So what is your allocation? Of course, I know this punchline, but it'll be interesting for people that don't know.
So I am, this is going to sound weird when I tell you, but I'm actually risk averse. So I own a few properties myself and I live in them. So I don't rent anything out. This is my bank is lifestyle. So, and I like to live in nice places. So that I don't consider money that I'm investing or doing anything with. That's just buried in lifestyle. My shares in Real Vision, as an entrepreneur, they could be worth nothing. They could be worth gazillion. That's not part of it. So what really matters is your liquid net worth, the money that you've got available to invest. And I'm 100% in crypto. And I feel like I'm underexposed. So maybe I didn't start with enough cash that I should have had more in cash, as opposed to in real estate or whatever. But it's 100%. And I feel massively underexposed. Now, why can I do 100%? Because I have income. I have numerous sources of income. So I've always got money coming in. If I lost, well, you're never going to lose 100% because I've got no leverage. So it could go down 80% and it'd be back to roughly where I bought it. So I'm kind of safe in this crypto space now. I can't really lose money, but I've got cash flow coming in. So even if I did lose it, it's not going to change my life. And in fact, cash flow coming in gives me an ability to buy at lower prices. So I'm structurally set up to take advantage of the biggest opportunity I've ever seen. And I'm comfortable with that. Now, I don't know what percentage of my total net worth it is because I don't think of total net worth as total net worth, because those are things that are never going to change. My beach house in Little Cayman, do I sell it and buy something else? I'm not going to invest in something else with it. That is the answer. Lifestyle is the answer to everything, right? We don't do anything else for any other reason, I don't think, or you shouldn't.